What's up, guys? It's Migs from Market Open. Finally, I had some time to do the support and resistance PowerPoint for you guys in the lesson. I'm actually currently snowed in here in Virginia, so got a little bit of time on my hands. So I figured I would do this lesson for you guys. So overall, this should be the only guide that you guys are going to need. I've noticed that a lot of the guides that are out there with support and resistance, they kind of cover only specific parts of support and resistance, perhaps just daily charts or just candlesticks themselves. So I wanted to go a little bit more in depth with it. So I'm actually going to be switching in and out of the PowerPoint the whole time, so don't mind me. All right, some of the things that we're going to cover today are support and resistance on the daily chart, what I specifically do to prepare for a day trade. So in the morning, whenever I'm doing my watch list, I draw out my levels. So you might hear me referring to that as, draw out my levels, blah, blah, blah. That's what I'm referring to. I'm looking at the daily chart. I draw out certain points that are of interest to me, and I put down the certain moving averages. So the 200 and the 50. I don't use the 20 whenever I'm drawing out levels for day trading. Then I'm going to cover support and resistance when you're looking for swing trades, either with a smaller chart like a 10-day chart, or the daily chart overall with a 6-month, which is typically what most swing traders do. Then I'm going to show you guys different support areas that have to do with the 50, the 200, and the 20 moving averages. If you guys don't know what moving averages are, just head over to Investopedia and check out the exact definitions. You guys need to know what moving averages are, as well as you guys should know how to read candlesticks. So before you guys get too deep into this lesson, make sure that you guys know what each candlestick means. If you guys want to go back on one of my lessons, I actually have a video on candlestick reading. And after that, I'm going to go into some examples of the intraday charts of candlesticks of support and resistance throughout the day. So intraday, while I'm trading, I will show you what my thought process is basically behind the candlesticks, either with candlesticks or certain money amounts. So let's go to, let me switch out of this. If it'll let me, there we go. So all right, so we'll switch out of this. We'll go into the daily chart for INTC. So first off, we'll start off drawing out the levels. How I did, I believe it was 2 days ago. So I'm going to cover up these 2 days, since that is what we were drawing our levels for. So as you can see, this is Intel. The blue line is the 50-day moving average, and the black line or darker line is the 200-day moving average. On this day, it had gotten some news, and it was gapping down somewhere around here, around the 450 or 460 mark-ish, somewhere around there. So what I was looking for is, if you're going to take a short on something, you're looking for an area that will provide support for you. So areas that would provide support for you if you're falling, the easiest place or the easiest way to do it is if you have some sort of marker that draws a line from left to right, you can basically just go start at the top and then just scroll down. And when you see places that basically hit more than 2 points, you can draw a line right there. So right here, you're going to have a level of support. And as you can see, this correlates exactly where the 50-day moving average is. That just happened by chance. So this area right here I know is going to be very significant. So now if I keep going down, the next level of support would be right here at the 43. So also, I'm not drawing out a level here at 43.78 because that would be resistance. So I'm trying to draw the level at support. So as you can see on here, at 43 it bounced 1, 2, 3, 4 times. So this is a level of support that I'm going to mark out right here. And the last of this pivot right here is at 42.64. This is also very important. So there. Okay, so that I know that those are my levels of support, and then I'm also going to draw out the 50. I'm going to put a line right here is 42.80, but what I do typically is I will change the color so I know that that is a major moving average that's in the way. All right, so let's see how the day played out. So as you can see, it opened up right here around 45.20. It sold off all the way down to 43.64, right around here, and as you can see, it didn't reach down here. But Intel is one of those companies, just like Apple, just like Walmart, those big major companies that a lot of the times, whenever investors see that it's cheap, people will scoop it up for a cheap price. Or sometimes either hedge funds will it'll fire off an algorithm and it'll pick up shares of certain companies that they think is undervalued during the time. So let's look at it a little bit closer at what happened during that day. So let's look at the 5-minute chart, and it was during this day right here. So as you can see, the levels that I drew out, it went sideways for a little bit, it dropped, and it consolidated right around the moving average that I was talking about. So the 50-day moving average, it was people were probably thinking, oh, it's going to bounce. It kind of just consolidated that way. But as soon as it broke, it just went straight down. Straight down. Now, the other, let's do the next one, RENN. So we need a 6-month chart. And I believe it was right. Let's do this. Let's go back. Okay, so now I know that it was gapping up above $13 or $13.50 or 14 or something like that. I forgot exactly what it gapped up to, but it was above this. So now this was actually one of my main candidates for a long, because I knew that on the daily chart it had absolutely no resistance. Hold on, let me switch this out so it works. There we go. It had absolutely no resistance. The only thing that I marked out was the top of this. Draw a line here. I said if it sells off, it should bounce perhaps here at the whole number of 13. So that's like one of the only places that I was looking for. So if it's gapping up above the resistance here, it has the sky to go to. So now, one of the things that I didn't do that I should have done, actually I should have looked at the weekly chart. So this is an overall 3-year chart. So if it gaps up above here, what are its next levels of resistance? Oh, actually, let me go back to the 6-month. So 6-month, also pay attention that the 50-day moving average and the 200-day moving average are below it and do not provide any sort of resistance for it if it's going up. So what I should have done really is gone to the weekly chart, and if it gaps up above the $13 mark, the next place it has resistance would be right here at the 1782 mark. And if you keep going up, you'll see here it touches several times here at the 1889. Right around here. So just get as close as we can. And if you notice, it actually gapped up, or it actually went up all the way up to the 1880 mark. Because it's a level that it's previously touched and it was not able to break. So where stocks move on a daily basis has everything to do with where it has been and where it can go on the daily chart. So yes, you can trade it based on patterns, but you can base where the stock is going based on the daily chart. So that's why it was one of my main candidates. If it gapped up, it started, where was it? Let's see exactly where it was. It gapped up to 13.38. I knew that it had this whole window. It had basically from 13 to 18 to 19 for it to run. So it is very likely for it if I was to jump in at a certain point for it to keep going up, because there is no resistance within that window. All right, let's see, what is next? I believe it's the daily. So, okay. All right, so now I'm going to break down support and resistance on a 10-day chart on the same exact stocks. So now we'll go to INTC. All right, so let's move this over. Actually, I got to create one. If you don't know how to make different time frames, this is how to. I thought I had already done it. Intraday, 10-day. I'm going to do a 15-minute. Add. There. Apply. Okay. All right. So I'm going to break it down in a 15-minute chart if you're trying to take a swing trade. Okay. I honestly do not do this. I know a lot of other people that do. But I'm trying to capture bigger moves usually on the whole intraday chart. Like I mentioned earlier, the stock gets where it's going. It's basically its roadmap by the daily chart. So, but on here, let's just say for some reason that you thought that there was an opportunity in Intel, and you've noticed that this 46 mark right here, it is a level of support. So like I said earlier, just kind of move your cursor across and then until it hits several spots. So now, so if you notice here, 46.50 is a level of support, resistance, and then 46 is the level of support. So if you wanted to, you could get in here at the break of 46.50 and put your stop at 46. So as you can see on here, I'll zoom in a little bit. You can see on here, it broke 46.50. It came back and tested the 46.50 area, and then it just kept going up. So now remember this phrase. Once you break resistance, it becomes support. So this is exactly what I mean. So if you think about it, there are buyers that are just getting more and more aggressive, that are buying it and don't want to miss the breakout. They're just getting fear of missing out. Basically, it's just FOMO. People that buy it at 51, 52, 50, 60, whatever, it doesn't matter. So they buy it, and then they're like, oh crap, I missed my entry. Some of these people don't want to chase it, so what do? They go, okay, well, I missed it at 46.50, but if it comes back to that, I'm going to buy some again. So that's exactly what happens. It's the people that don't want to miss out on the move. They're still sitting there with their order saying, I want to get in if it comes back to 46.50. So what does it do? It comes back exactly to that spot where it broke out, and it just heads higher. Unfortunately, I think Intel got some news overnight, and it actually plummeted really bad. So if you did get it around here, it's very unfortunate. But yeah, there's really nothing you can do about something like that. The company gets bad news, and then you just lose a whole bunch of money. Very unfortunate. All right, now let's break it down on RENN. Let's see here. 10-day chart. So you back out. You go, okay, so what points are of interest? So you can see, let's see here, somewhere around, yep, right around here. Actually, let me go ahead and delete these lines. All right, so you've noticed that right around here at the $10 mark, there's some decent support on it. So you're looking for resistance to break. Let's see, somewhere around here. I guess if you're taking a day trade on it, you could take it right here around the, let's see, this is the $12 mark. As if you notice on here, it came right up to the $12 mark right here, pulled back and actually kept going. So this whole area right here, anything above the $11 mark is basically just breaking out. The support is somewhere down here around the $9.81, and basically right around the $10 mark. So you're just looking basically for different points where it touches. So for support, you can see on here 10, 10, 12-ish or so. It's just, it's slowly kind of climbing up. It's not really a good chart to break down, but I mean, not all charts are perfect. But as you can see on here, another thing that I wanted to cover is how whole dollars provide resistance and support. So what I mean by that is just a psychological aspect of it. Is people will say, hey, I'll get in at the break of $10. Hey, I'll get in at the break of $11. Same thing with half dollars. So 11.50, 12.50, and some of the smaller cap stocks, you can actually break it down to 25 cents. So 25 cents, 50 cents, and whole dollars are definitely major support and resistance for some stocks. This actually provides pretty good example for it in the intraday chart. So if you're trying to see what resistance is, right here at the 11.50 mark was the highest that somebody paid for it in pre-market. And as you can see right here, somebody actually bought it all the way up to that point, and it wasn't able to break out until the very next candle. So as soon as it did break past that resistance point at 11.50, you can see that a lot of volume actually came in because they knew, hey, this is resistance of pre-market. So they bought it in with a lot of volume, pulled back, kept going. And as you can see here, this 12.50, it kind of actually hovered right around the 12.50 mark. So this is what I was saying about half dollars, full dollars. So it hovered around the 12.50, pulled back, and it actually consolidated right above, right below 13. So it's just, the stock was not strong enough for it to break through the 13 mark. So it just kind of sold off for the rest of the day. Now let's look at the next day. It actually kept going up and consolidated right around the 14.50 mark. And when it broke this $15 mark, whole dollar, it broke through with a lot of volume, as you can see. Not really quite sure what it did the last couple of days, but it's actually selling off now. All right, let's see. Let's cover the next topic. Oh, that's right, the 20-day moving average. So this is prime example of some of the moving averages that swing traders and investors use. The 20-day is obviously a smaller, for a smaller time frame type hold. So if you notice on here, it actually trends pretty nicely with the 20-day moving average. Now, take into account that not every stock will trend with moving averages as well as others. Please remember that. Sometimes you will see stocks that don't give a crap about where the 20-day, the 50-day, or the 200-day, it will just go all over the place. It just does not care. So as you can see, this trends pretty well around the 20-day. Anytime that it comes to the 20-day moving average would be a pretty good dip buy. Just take that into account. Now, same thing with the 50-day moving average. Now, the 50-day moving average is actually this blue line here, and the 200-day is the red line here. So as you can see on here, for it to become a valid trend, you need at least 2 points. So as you can see on here, the 50-day, it consolidated, it went up, it came back to the 50, and it just skyrocketed. So now what you would be waiting for on something like CRC is perhaps for it to pull back to the 50-day moving average and for it to bounce again. Now here's another example of INTC. So earlier I was talking about the 50-day moving average, and when things like that break, they tend to have very violent reactions. So as you can see, it consolidated here around the 50 and the 200. It went up, came back, consolidated around the 50 again. It went up, and when it pulled back and it got bad news a few days ago when it gapped down, remember that it consolidated right around the 250. So I think it pulled it up on the 5-minute chart. Remember, it consolidated right here. And as it broke, it had a very violent reaction straight down. So remember that stocks get their roadmap from the daily chart. Don't forget that. All right, next is the 200-day moving average. So the 200-day moving average is massive support. So if I was to give you guys an analogy, the 20-day moving average would be like a wall in your house that's just made out of drywall, right? So you can punch through it. It's not hard, you know, but it does provide some sort of support. Then the 50-day moving average would be like a brick wall. It's a lot harder to break through. You might need some tools, or by tools I mean something like a negative catalyst or maybe a positive catalyst if you're breaking through it, and if it's resistance. Now, the 200-day moving average is a major support for basically any stock. So if the 50-day moving average is a brick wall, the 200-day moving average would be just a steel wall, just something, well, I wouldn't really call it steel wall, but something that is very hard to break through, and whenever it does break through, it also has a very violent reaction. So something would need a very bad catalyst for it to break through the 200 moving average, and that's it because it definitely provides a very good form of support. Okay, the next thing that I'm going to cover is within the intraday chart. I kind of already showed you guys about the whole numbers and half numbers. Next thing I'm going to cover is VWAP and the 9 EMA. So let's see here. Cover it on this day. All right, let's see here. So Roku took off with no pullbacks. Right here, the 56 mark, you saw that it didn't want to go through. It pulled back. It gathered up some strength. Now this yellow line here is the 9 moving average. So the 9 moving average, it is the most popular intraday moving average. So it's a 9 exponential moving average. So it's a little bit quicker to snap since it's a exponential moving average, and it actually puts more weight, basically the end of the tail that's kind of forming, more weight towards the volume. So if towards the volume in the end candle. So if the last couple of candles have a lot of volume behind them, the 9 moving average will actually whip around a little bit faster. Okay, so what I mean by that is whenever the stock is in a trend, it will most likely pull back to the moving average, or if it's pulling back a lot, it'll actually pull back to VWAP. So as you can see on here, Roku took off, it pulled back to the moving average, and it just kept going higher, pulled back to the 9 moving average, kept going higher. Now, during midday, a lot of stocks tend to pull back really hard back to VWAP, so they can consolidate, get more energy, and come back. So remember that stocks get their strength from either consolidation or pulling back and gathering up strength. So one of the good analogies that I've heard is just think of it as you are a runner, right? You're a marathon runner, and you just ran this whole way, took a little break, ran, took a little break, and then kept going. You went all the way from 52 to 57. You just ran $5. You need a little bit of a break. So for it to keep going higher, you're going to need to consolidate or pull back. During midday support, one of the best spots is VWAP. As you can see, it actually pulls right back to VWAP, bounces, keeps going higher, and unfortunately it was not able to hold this move. But once it broke support, like I mentioned earlier, once you break a major support area, you have a violent reaction. So as you can see, that there's actually a lot of volume in these candles right here. So it broke and it just went lower. So now, same thing with charts every single day. Just remember that for these things to happen, there has to be a lot of volume for the patterns to play out, basically. So let me see what's next. Whole number resistance. Actually, let's go back to whole number resistance on NVIDIA. This is a really good example. Now NVIDIA had good news during this day. It was on the 18th or so, and it ran all the way from 203 to 213. So there's a $10 range here. So now if you notice, NVIDIA will actually consolidate below whole numbers a lot. So it pulls up, it consolidates right below 208, I did take this trade. I took it right above 208 as it broke. It pulled up past 209 up to 210, consolidated right below 209. It pulled back. It broke again. It went all the way up to 212. So if you notice, it keeps going up, consolidating, and it keeps going up to whole numbers. So these higher price stocks love consolidating or love having support and resistance around whole numbers. So now, also, if you notice that the 9 moving average doesn't really do this well with NVIDIA. NVIDIA is just one of those stocks that doesn't really give a crap really about the 9 moving average. It doesn't. Most of the times that I've traded it and there's not a lot of volume behind it or some sort of catalyst or something, I usually end up just getting chopped out, and it doesn't really quite work out. But if you notice on here, it loves consolidating and breaking out with a lot of volume over whole numbers. So now, we also have a lot of people in the room that like to trade lower price stocks, which is completely fine. You can make a lot of money that way, but just do not forget that you can make just as much money trading larger cap stocks. So what I mean is, NVIDIA, yes, it's a $200 stock, but you don't need 1,000 shares of this. I mean, 1,000 shares of this obviously is super expensive, but if you have a smaller account with a little bit of leverage, you can buy 100 shares and you can rip this thing for $10. You can rip it for $5. So one of the things that made me want to switch over to larger cap stocks is would it be easier for you to rip a small cap stock for 20, 30, 40 cents? Or would it be easier for you to capture $1, $2, or $3 out of a $10 move? To me, it was a no-brainer. So that's kind of why I switched over. Just a little bit, I guess, of a heads up. But as you can see, NVIDIA here topped out right around the 213.65. So it wasn't a whole number, but to the rest of the day, you can see it was 208, 210, 211, and you will see this every single day on different stocks as they kind of move up and down throughout their range. Let's see here, support whole numbers. What's next? Oh yeah, actually, so some stocks don't trend well with some moving averages. Actually, just for example, we'll talk about NVIDIA on this day. Actually, it's today. As you can see, there is no catalyst behind NVIDIA today. So having a trading plan, as in like when it comes up, I want to short NVIDIA today. So if it comes up to the 9 and it's headed down, I'm going to short it at the 9 and then just kind of ride it down all day. As you can see on here, this thing is just kind of choppy. It does not care about the 9 moving average. It just does not care. It barely even cares about VWAP. So just some stocks just do not care about certain moving averages. I believe the next thing was, also I wanted to talk about ETFs. So ETFs don't trade like stocks. They follow the price of the underlying asset. For example, JNUG. JNUG does not trade like a regular stock. Can you apply patterns to it? Of course you can. But is it more secure to do it on a stock where people are looking for those sort of things? It would be a lot safer for you to do it on a stock, yes. Will JNUG throw out some sort of pattern that you can probably follow? Yes. Is it as safe? No, it's not. So if you're going to try to apply something that's meant for stocks into an ETF or something like that, be prepared to probably take more losses. Just going to throw that out there. I've tried to apply these patterns and these logical, things that make sense into some ETFs, and the percentage of it working out is a lot lower than if I trade a stock with volume. It just has not worked out for me very well. So, I mean, you can do your own research and, let me know if it works out for you. Just for me, it just has not worked out. Patterns to stocks, but they work better on stocks. Okay, let's see. What is next? All right, some words of wisdom. If the stock does not fit the criteria you have set for yourself, leave it alone. Don't fight the market and try to see something that is not there. I get so many questions every single day of people asking me, hey, does this look good? What do you think about this stock? And a lot of the stocks that I get sent, they're trying to apply certain things that the people that are trading that stock do not care about. So yes, 50 and the 200-day moving average and the 9 and the 20 and all that stuff, they are all relevant, yes. But when you're trying to apply something like that to a stock that the people that are in it, just think about it, the people that are moving the stock up and down, because stocks don't move by themselves, obviously. So the people that are in it do not care about certain moving averages. So let's see what JTAG does. So as you can see on here, yes, this is an ETF, the ETF for gold. This is a 50-day moving average. This is a 200-day moving average. This thing does not care. The people that are buying and selling gold do not care about moving averages on this. So just take that into account. So if your strategy would be to, oh, I'm going to buy it if it breaks over the 50-day moving average, you're going to get chopped. You're going to lose all your money. Look what happens. It goes up, comes down, goes up, comes down, goes up, comes down. It's ridiculous. Same thing here, same thing here. The only time that would have worked would have been here. So it would have worked 1 out of the 10, 20 times that you try to apply it. So please make sure that you are looking at a trend or something that the stock or the people in the stock respect. Just take that into account. Let's see, what is next? No volume. Oh, also, I touched a little bit on it earlier. If you're trading a stock intraday, make sure that the stock has volume behind it. So patterns are all good and gravy and they work, but they only work when the mob is behind it. Think about it. The market is made up of 80% money of hedge funds and prop funds. The rest 20% are just retail traders just like you and I. So money has to be behind these stocks so they can fill out a pattern, and for them to work, basically they'll fill themselves just like a self-fulfilling prophecy. Because if there is absolutely no volume behind it and there's nobody looking at the stock, these patterns, these hypotheses of yours will not come true, unfortunately, because there's nobody looking at these stocks. If you guys do have any questions, make sure to leave them down in the comment section below. If this video did help you, make sure to give it a thumbs up. And also, guys, if you guys do have a Facebook, make sure to follow us on our Facebook group. So not follow us, but join our Facebook group. It's basically a bunch of people that are like-minded, that like trading stocks, investing, swing trading, and we basically just share ideas, tickers, watch lists on a daily basis. And it helps a lot of people that have a lot of questions that they need answered, or maybe just to be able to help other people. So either way, until next time, I'll talk to you guys soon.